What's up, you guys? This is Louis here today, and we're going to talk about why the Fed's cut rates to zero and how this is going to affect us all. But before we get into that, make sure to hit the like button, the subscribe button, comment, and share this video with your families and friends. Okay, guys, so now that you have done that, let's begin talking about why did the Feds cut rates. Things are starting to get really serious. Remember that on March 3rd, the Feds cut their rates by 0.5% in order to provide some financial relief because of this virus. Well, yesterday, they made an emergency meeting and they dropped it to nearly zero. And this shows that things are about to get really interesting. This might even be a sign that we might be heading towards a recession because of this virus. This makes me think that the Feds are very worried about the state of the economy because of this illness that is going around. This cut, I believe, was an effort to instill some confidence in the market and the American people. But as you've seen, things are not looking up today. The market has gone down nearly 3,000 points. Everything is under red. The stock market was even halted today because investors are running left and right and stocks are just plunging. So if you have a 401k, not even look at it because this is going to give you a heart attack. Everything is going down. Things are like I've never seen them before. The Feds are very concerned about the disruptions in the economy due to the virus. But to my belief, disruptions are already here. Just look around you. Sporting events, university, many school districts are closing. Scratch that. When New York City closes down its school district, that's the best sign that it is time to take this seriously. Because let's be real, de Blasio never closes schools. In larger cities, bars, dining restaurants, and other entertainment places are closed. This means that you get to watch some series in Netflix, Hulu, Disney Plus. You get to see me here in YouTube, just talking about this. Yeah. Well, according to the Washington Post, these moves are the most dramatic by the U.S. Central Bank since the 2008 financial crisis, and they're aimed at keeping financial markets stable and making borrowing costs as low as possible as businesses around the country close their doors and the U.S. economy hurdles towards a recession. In addition, the Feds also announced that they are restarting the crisis-era program of bond purchases known as quantitative easing, in which they buy hundreds of billions of dollars in bonds, mortgages, and mortgage-backed securities in order to keep the markets and the economy from collapsing. Quantitative easing is just, it means that, the central banks buy these assets in order to inject money into the economy and make sure that, everything is working right and there's money flowing. But now let's talk about what this means for us regular people. Why did the Feds cut rate? Basically because of the pandemic. There's no other reason. They're just scared and they want to ease the burden a little by basically lowering what they charge for borrow money. Basically, banks get money for cheap, and then we get some of the benefits of that. So what did they say about this? And this is what they said exactly about why they're doing it. The discount window plays an important role in supporting the liquidity and stability of the banking system and the effective implementation of monetary policy. By providing ready access to funding, the discount window helps depository institutions, banks, manage their liquidity risk efficiently and avoid actions that have negative consequences for their customers, such as withdrawing credit during times of market stress. Thus, the discount window supports the smooth flow of credit to households and businesses. Providing liquidity in this way is one of the original purposes of the Federal Reserve System and other central banks around the world. This basically means that they're providing money, for cheap in order to make sure that the economy keeps on moving and people, are able to get better things without paying as much money for interest. This will definitely affect loans. And let's talk about mortgage loans. They will be affected. So you will be seeing lower mortgage rates. They might not go, down as much today, but, in the next few weeks, you may start to see some of these mortgage loans go, down drastically, especially after what happened today in the stock market. You will definitely see a decline in the rates in the mortgage industry. A lower mortgage rate means that buyers are able to afford more home for a lower monthly payment. Also, it means that a lot of people will begin to refinance in order to save money in the long run. Now, that has been one of the main reasons why last week we saw the mortgage rate fluctuating a lot, because the demand for refinancing had increased drastically. Everyone was calling their lenders and starting the application. So if you own a home, make sure that you call your lender, ask to see what are your options, and you'll be surprised. Refinancing your home can be something really good for you, especially if you have a loan that has high interest and you had it for more than 6 months. We refinanced our home last September, and it was great because we were able to even roll our closing cost into the loan, and we didn't pay anything until November. So, it was a win-win for us. We were able to save some money, and we were able to get a lower rate, and, we got a lot of benefits out of it. So if you own investment properties, this is the time for you to call your lender. You never know. I mean, I've been calling my lenders, and Denise, thank you so much for all the options. And we've been doing some work in order to get some loans refinanced and things like that. On the other hand, we also have car loans, personal loans, credit cards, and those all will have lower APRs. When it comes to credit cards, like I always say, remember, I always recommend you to pay them in full every month, since even though they might be lower, you're still going to have to pay, an interest rate that is very high, because, that's the way credit cards work. So just make sure you make your payment every month, every statement period, to avoid having to pay interest for your credit card. When it comes to your savings, and this is very important, when it comes to your savings, the rates will drop. Just because, the banks are receiving so much money so cheap, they will begin, lowering the rates. So welcome back to 2008, my people. You will likely be receiving a very low interest rate, even in high yield savings. However, there's still many good, high yield savings out there. So, you can start looking around, see, if you find different products. And you need to pay attention that you're earning at least 1.6% of your money. Otherwise, your money is losing value every day by sitting down in an account. A regular savings account, on average is giving you 0.01% or 0.02. So just make sure, if you have money, try to put it on a high yield savings so you can get a better return than a regular saving. The stock market. Well, this might be a crazy week. And you just saw that today with the market going all the way down like that. It will be very volatile. Things will go up and down. In these days, the market are being driven by emotions, fears, and uncertainty. So, that's just what's going to happen. That's what you're going to see for the next few weeks until this virus is under control. So what is my plan? I'm going to continue working on my investments. I'm going to try to pick up some good deals. I'm going to look around the real estate industry, see if I find something good, because mortgages are going down. So, it just makes sense for you to start looking around and see if you can, pick up some good stuff in there. If I'm not going to be getting a good return on my savings, I'm going to be investing my money. That's what I'm going to do. I also going to continue building my emergency fund. Remember, I always, I'll recommend for you to have at least 3 months of your expenses saved, because you never know what's going to happen, especially if you need to stay 2, 3, 4 weeks inside your house and you're not able to, go out and work. You want to be able to pay all your bills and stuff. So also stay home. Don't be that person that, due to negligence, gets infected and then you get infected everyone else around your environment. Buy the necessary supplies. Do not panic. When people panic, things tend to get worse. Just look around you. There's no toilet paper anywhere and there's no hand sanitizer, and that's crazy. I don't even know why that's happening. So, People are panicking, so do not panic, buy the necessary things. Finally, do not forget to like, comment, subscribe, and share, and see you next time, everybody.